Hello, today is the 12th of October evening, Sunday. Basically, a preview of the week, um, which is about to take place. Uh, no macro releases, obviously, because the government is shut down. So there is way less uh, which can be said about this market uh, in theoretical terms. So only practice, and I think I'll just share with you some of my current processes which I seek to implement. And basically, the whole thesis of the second half of this year for me is finalization of the method. So I've spent quite a bit of time uh, studying futures options, um, quite a bit of fundamental analysis to incorporate all that in a style which is comfortable for me to utilize. So that's why, in some aspects, I'm just playing really small at this moment. So, but that's about to change quite soon. And this actually that week, which has been concluded, is a good week to sort of to take a look at it from a practical perspective, as I've said before, and why some of the techniques which I'm implementing now are quite useful. So here we obviously have BTC. What a day it was, Friday, right? Hopefully you have survived and no real trouble in your portfolio. If unfortunately it is the fact, you can frame it as a learning experience, because in this business we all learn, and we all learn non-stop, and lots of professionals do stupid mistakes and pay high price, especially in dangerous professions. I mean, guys who like climb skyscrapers, or fly planes, or do skydiving. These they tend to make these mistakes, which only pros can make. So it's difficult to become a real pro in the market, but it's quite easy to get complacent and pay the price when events like this happen. So just to remind you, what was it? Another announcement on tariffs, which I was surprised quite a bit. To be honest, obviously everybody thought that it's a done deal, postpone, and all of a sudden we got it. Quite a bit of a sell-off in the markets. Actually, you can see that here in BTC. This is Binance. The turnover was one of the highest uh, if you compare it to the recent time periods. The only thing of similar magnitude was here in March for some reason, and I don't even. Oh yeah, of course it was around the tariff or deal, obviously. So another news-driven, verbal intervention-driven sell-off, and what I was doing at that moment, or actually what I was doing and stopped doing, is I had a bunch of um, call options on BTC, Ethereum, and Solana. And the motivation behind this purchase was like this. About about a week ago, I don't remember exactly what was it, or was it Sunday? No, it was actually 2 weeks ago. Yeah, uh, I saw this in Bitcoin. Basically, what can be called pause, pivot. It's a technical situation when the price runs up, then holds most of its advances, then basically trading stops for one day, and it's okay if it's weakened with the world of the coin, because it works lots of time. Actually, I prefer to think and plan ahead for the week during the weekend in this domain, and it worked quite well for me so far. So I'm not supportive of the skepticism that weekends are completely irrelevant. But in this case, they were, and what happened next? My calls um, were worthless. But uh, at the same time, this still can be considered a good trade because there was no lapse of discipline, and even if I wanted to, I wouldn't be able to omit my stops, and that's the beauty of options. So I had these calls in BTC, in Solana, and in Ethereum, and you can still see my strikes here. The first takeaway I wanted to share with you is that actually this situation could be resolved in a different way, and namely, it could be realized not through basic purchase of call options, but something which is called straddle could be implemented, where we purchase basically put and call options, and we bet on volatility overall, not a directional bet. The only direction we expect to take place, the only movement in one direction is the movement in the direction of the expanding volatility. So that could have worked quite well, and that's a very good takeaway, which I will most certainly be adding to my own playbook, my tool belt of things I do in the markets. As of now, this what happened next is this scare turned out, at least at the current moment, to be just a scare again, and Donald Trump issued another message in his social network, and basically President Xi is a great guy, or something along those lines, and everything will be resolved. I don't have any clue how to trade these markets now. I mean, today and yesterday, maybe go on some ultra intraday time frame and try to snipe it from there. Basically, the only thing I've spotted here, but decided not to take it because it's still very volatile. It's this is 2% suboptimal situation, and decided not to do it. But I've mentioned another pattern with the name I have coined myself, and the name of it is the 50 day. It was originally on the daily, but it's like 50 interval MA catch-up. I've noticed an interesting pattern in which if the price is catching up with the 50-day moving average and fails to run from it in a bullish manner to the upside, if we're talking about the uptrend, or in a bearish manner like it was supposed to go further down here. Sometimes it happens, but when it doesn't, in lots of times it's being concluded by this sharp move in the other direction. So I'm pointing these out because I want to ingrain them in my own head to use them more readily too. So that was the only thing which sort of pointed on the tradability of this whole ordeal. But if you take a look at the intraday chart, it's for me personally, I'm not very comfortable with the intraday chart being as a sole decision, um, as the sole base for the decision, because even here, like on the daily, it's uh, Saturday was 7% in terms of price volatility, which is a bit too much for me. Everything could happen, and further collapse was an option, and actually still an option too, because we'll talk about that. So yeah, that's basically the market, which is being managed in by political speakers in real time, by their verbal interventions. So that's some people call it black swan, because this sell-off in BTC and other major alternative finance DeFi coins were triggered an absolute massacre in the world of altcoins, and I've seen reports of people suffering and even taking their lives, their savings being wiped out. But that's just the name of the game. Oh, uh, I'm just trying to be polite here. I promise you, I absolutely promise you, there will be a moment when lots of people will pay a very high price in this market, and maybe Friday was not the beginning of it, but we're still in wait and see here, in a wait and see mode here. Um, but it's inevitable, and especially if this shallow rally continues. And what do I mean when I say shallow rally, which I did quite a bit before? This is the definition of shallow rally. Can I share my screen here? Yeah, I think, or maybe not. I'm not so sure, because I'm still fighting with the OBS. But I'll illustrate it with my words then. You can. Oh, I know what to do. I know what to do. I'll just drag it here. Yeah. Now it should be right. Okay. So here we see indices, and here we see this fancy line, which were not only they weren't accompanying Nasdaq, NYC, Dow, and Russell. They were actually slightly trending down. So what do these lines show us? It's basically the difference between advancing and declining stocks. And this is not even a shallow rally. The definition of a shallow rally is a rally which is being built around a very limited number of stocks, which was true. But this is, if we take a look at Nasdaq, when they basically move in different directions, that's not a shallow rally. That's a covert bear market, which was taking place in Nasdaq, in Russell, no, it was mainly Nasdaq and Russell, which is interesting. So only industrial giants, transnational corporations, a select number of technology names, and that was it. And should I remind you that the American stock market consists of 8,000 names, many more, and this is not sustainable. So even without any verbal interventions of Donald Trump or Jerome Powell, this was a question of time. And either the advanced decline line starts catching up, and that means that money are being dispersed through the market more evenly, and that's why you are more safe generally buying individual names, or the index comes to an equilibrium with the advanced decline line. So far, the second scenario is taking place, but we will see. And actually, I'm very interested with the reaction of the market on Monday, because I think that this picture is the main illustration of the real fragility of this market. So institutions are not in a rush to deploy significant amount of capital, with the exception of select AI semiconductor names, basically at this moment. And you saw the magnitude of sell-offs there on Friday. So that doesn't mean institutional support at all. So let's take a look at those individual names. Once again, not talking about macro side of things too much, because there is simply no releases of this macro information. So the first thing, it's not individual stocks yet, but the indices themselves. So this is not the end of the world, and it's far from being at least partially that dramatic as it was in the world of altcoins, right? So basically, touchdown, an elevator down the 50-day moving average, and nothing has really changed in this trend. You can sort of see it quite well here. I will enable another moving average, the 20-day. So it's very, very early to proclaim something really serious here. And even this correction, should it go to the 200, I'm sorry, day moving average, is absolutely normal and, in my opinion, absolutely necessary after this extremely long lockout rally. And it's as I've said, it's too early to be apocalyptic, but it was so surprising, and it was Friday, so that's why these hard feelings, and obviously the crypto situation helped to form this perception of something drastic happening here. It's not at all. And now you see that the futures, I have decided to wait till the futures start trading, and you can see here that it's trading inside now so far. So no collapse. Obviously, the worst situation in which it just goes straight down is far from being true. And basically, you can see what's happening in the world of coin. As I've said, it's bouncing back, but you can't. It's just the only thing you could do, just buy it intraday of some really, really small time frame chart, maybe utilizing this 50 period catch-up pattern. But obviously not nothing even remotely resembling flash crash or anything serious at this moment. So what else? Yeah, basically the same situation everywhere, and I think I will mention maybe several of my positions as well. The most important thing right now is that when things like these happen, you should be already positioned based on your fundamental bias, which you have obtained through your fundamental analysis or your technical situation, or a mix of those. And I'm still quite bearish, and I think I made it pretty clear why. In brief, it's a very, very uncertain situation in all sectors of American economy, with the exception of AI, where even there we sort of start to see these first signs of how do you say it, of people slowly becoming aware of the bubbly nature of it, because the circle investment thing, which got quite a bit of coverage. And also I saw maybe first reports from researchers who claim that AI isn't actually that effective in replacing humans, even in white collar jobs, and that lots of deployments aren't actually working as intended, and they are being rolled back, especially in customer support and other fields where human interaction is needed. So it could be, it's very resemblant of this euphoria and disappointment cycle, and from the ashes of this euphoria real companies emerge, most often not the ones who were in the first wave of these companies, and then real adoption starts. That's exactly what happened with the .com, quote unquote, internet stocks. Almost none of them are present today, and Google, Microsoft, and others, they were created later. So we'll see. No definite signals that it's about to start now. Maybe just a normal correction. But even if you take this moderate stance, you still gotta admit that lots of stocks in this market have made very huge runs, like Nvidia, and not only Nvidia, but also some AI infrastructure and hyperscaler stocks like CRDO, and other stocks which provide infrastructure, data. They are quite expensive, and lots of them made these 100% runs. And this doesn't look like a blow off top to me, like no real signs of absolutely rational extension here, but a pause, at least a pause here, and some time to consolidate is absolutely okay now. And there are also quantum stocks, which are, in my opinion, the least fundamentally based stocks of this market, and they are quite expensive too these days, and made these runs as well. So this is a very relevant example. But at this moment, if you take a look at the banks, I'm sorry, these are semiconductors, but the banks, yeah. The banks look quite weak, but this is not bear market at all, because you should correct at least 20% from the top. I'm watching banks because they are maybe not the fastest moving and not the most interesting stocks to trade, even with leverage, but you gotta be able to assess what's happening with them, because if they are weak, and there are some stories about worsening credit conditions in the States because of the tariff uncertainty. Unless they look really weak, it will be difficult to break this rally. And US Bancorp actually looks quite bad. I just noticed, because others are holding relatively well. Obviously, Friday was quite an ugly day, but US Bancorp looks really bad. Maybe something with their credit portfolio, who knows? uh, but semis are far from being that weak. If they will open inside these ranges tomorrow, they could repair their consolidations in a week and even produce new buy points. So we'll see. What else can I add here? So yeah, I wanted to share a bit about my positions. I am short Russell actually, and my thesis here is like this. So I'm seeing this process of consolidation of American industry, and uh, despite the fact that small business is really really important for the economy, but it is lagging, and the index is lagging, while Nasdaq made new highs. Russell did not actually, and if we are to correct here, which is quite possible with this triple top formation here, it could correct quite a bit, especially if something severe happens. So that's why I decided to short it, and I'm shorting it by holding calls on TZA, which is a leveraged ETF on Russell. And I have a November 21 call with the strike price of 8, which was quite expensive when I bought it, so I'm in the money, but basically around break even now. So the idea here is that if it is to correct, it will correct quite a bit. And I'm watching this on the weekly, obviously. Maybe it wouldn't be so drastic. And this is one of those extremely asymmetric bets. I won't tell you the number of contracts. It's pretty small at this point because I'm still in the early stages of this hopefully final implementation of my method. But at some point, you gotta go big with these, and that's where fun begins. And there are also other nuances in the world of options, which make these trades possible and relatively safe. We will discuss them later. So this is my first position, and the other thing I assumed is I think it's time to wrap up. I will show another position, which is uranium, and I was lucky to study a very good fundamental research about uranium, and this resource is in a perfect bottleneck. It's quite likely to be one of the most not financial advice. Should I remind you of that? But for me personally, lots of things are pointing on the possibility of it becoming a very important, probably the most important fuel on Earth. And the situation with uranium is awful. It's it's very difficult to procure. It will take lots of time to build new facilities to extract it and to purify it. And I think this one could even resist, or maybe at least consolidate and take pause during this correction, should it take place. And I've decided to express it through calls, January calls, with the strike of 50. So nothing, no spreads, but I'm thinking about maybe capping the upside by creating the second leg, and both for TZA and for uranium with the bull call spreads. a very interesting approach, which could lower your risk even further, despite the fact that options already provide the best possible protection from downside. No gaps, my friends. This sounds like a dream. I finally understood that when you trade options, you are not subject to the gap risk. So anyway, and I think you can see that all stocks are basically down. Very few names are in the green. You can also see that there is a clear pattern in which only Oklo, which is a nuclear name too, one of the hottest stocks of this season. So that at least partially proves that my idea here can be right. There is another name, which if you can see how you can see, but you can take a look here and you see that this chart is quite different maybe from this chart, from its reaction to the sell-off. Well, lots of names, especially some semis, sold off quite a bit. Uranium didn't, but another name, which is called LOAR, LOAR, which is a niche producer of aerospace equipment, basically did nothing, and the volatility is contracting here. So that's very interesting. That could be an aberration, obviously. Sometimes they just, they forget about them. But that's an interesting situation to keep it in your watch list. Unfortunately, not too easy to express it through options because options markets is not very mature here. So to conclude, as I've said, what the best thing here is not to do if it is not in your not to do anything which is not in your game plan, be it Bitcoin, altcoins, stocks. I was building this portfolio, and there are other shorts and longs in my portfolio, and I will be scaling it until it reaches sort of full capacity in the coming months. And it was very pleasant to be up, maybe only 1% on Friday when there was blood on the street, but it worked, and it's very encouraging to me. I mean, the long short positioning, and this market is indeed fragile and scared deep within what we saw, and apart from not doing anything which is not in your plan, it's a complete wait and see. So if you have a process, trust your process, select setups, generate ideas according to your method. But being sucked in and completely chewed in this market is a very simple situation. And unfortunately, lots of people paid the price. I mean, on Friday, make sure that you will not be the next one who will learn it the hard way. Take care, and let's see what the markets are about to do next week. Bye bye.